Holy smokes, y'all. I just have to say, I am utterly exhausted with the idiocy, whatever. The idiots that frequent the YouTube or Twitter comment section. It is utterly moronic. So listen very closely. I personally believe in the very following. And I want to make this crystal clear because a lot of people can't stand to get through even 60 seconds of a video before drawing dumb, idiotic conclusions. Number one, and I've made this very clear, I believe you should get vaccinated. However, I believe that should be your choice. Number two, I believe that Omicron is mostly a nothing burger, that it is being overblown by markets. However, number three, that does not mean that markets are not identifying holes in the data that we're getting and that we need to be aware of those holes in the market, like my South Africa video that I just posted showing the three major issues we have with age, localization, and prior immunity in South Africa. And if you don't understand what those three things are, then you should watch the video on the real reason on why the market is fearing Omicron. The problem is only the smart intellectuals who actually care for additional insight make it to the end of the video to understand a full context of what this actually means for investing in our portfolio. But here's a clear, crystal clear message to the idiots who just watched the first 60 seconds and they're like, wait a minute, Kevin, you're the one who said the Omicron's a nothing burger. Now you're saying the market's overreacting. Blah, 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 blah. Fuck off. Like, holy shit. They're just some dumb people who don't watch the video and they leave comments like FUD or, oh, you just want your puts to print or you just want to sell your courses. Bunch of blind, bumbling dummies who are unwilling to receive new information. It's literally like their brains have this force field that's like, nope, I'm not taking in new information. Joe Rogan said that's FUD. FUD. That's literally the comment section when it comes to Omicron data. And if you don't want new Omicron information, don't click on the goddamn video. It's not that hard. Jesus. So I want to be crystal freaking clear. I'm all in on this market. I believe this market is overreacting to Omicron, Build Back Better, and the Fed. For the smart people who actually listen to my content all the way through, you know that I believe inflation will come down. You know that I believe our economy will be the most resilient economy that we've ever seen. We're going to have the most efficient tech companies the world has ever seen because we're becoming so freaking efficient at companies. We have cleared, this pandemic has cleared inefficiencies out of tech companies. That's not to say they don't still exist, but this market has cleared inefficiencies out of tech companies. And if you think tech companies are overvalued, you got another thing coming to you in the next decade. I don't really care. It's fine. Make whatever bet you want. But to the idiots who write FUD or bullcrap comments in the comment section or whatever, they're the same dummies who are just trying to get upvotes, saying things like backed holdings to the moon at $50 or dwacked to the moon at 170 when I make videos saying it's a bubble and it's going to crash. They're the same people going, oh, that's just FUD, Kevin. That's just FUD. I literally said both of those would crash. They crashed, okay? It doesn't mean I'm perfect on everything. The point is, the dumb emotion that you get in the comment section is so bloody dangerous. It like blinds people from actually trying to have their minds be permeable to other perspectives. And it's this whole Twitter and YouTube comment section culture that's like toxic and keeps people dumb. Don't even start. But anyway, I think I went through enough of that. Okay. With all that said now, let's go ahead and hop into what is actually happening in the market because the market is fearful and you have to respect that the market goes in cycles. That's the way it is. So get over it. Okay. So the Dow's down 1.49%, S&P is down 1.37%, the Nasdaq's down 1.42%, the Russell's down 1.41%. It's painful. Volatility is up about 9%. It's less volatility than what we had at the beginning of the day. We went all the way up to about 50 in terms of, we went up to about 15% earlier. We went up to about 25 on the VIX earlier. So we've seen some of the volatility, some of that pain come down. So you got to be careful on that. Now, the reason I say that is because the best time, in my opinion, to buy is when volatility is at max. Those are like the ideal times to go shopping. Not always, but frequently. Like that fear index goes up, especially when it went above 30. I think it was on December 6th. Those were some of the low prices, which we've literally seen a revisit to, even though volatility has not gone back to 30. We've seen a lot of companies revisit those numbers. And it's specifically those bottoms that we keep talking about, like the Lemonade, DocuSign, SoFi, Cloudflare, Enphase, Hood, Matterport, Piton, Carnival Cruise Lines, Affirm. These continue to hit bottoms in terms of some of their prices. Doesn't mean they can't go lower, but in my opinion, it's a good sign. It's also, I'm going to probably post a video either later today or tomorrow. We already talked about this in the course member live stream, but about this cat and mouse game that's actually happening with hedgies right now. You're gonna want, if you're not subscribed yet, you're gonna want to subscribe for that and watch for that. I'll probably put in the title something about cat and mouse. So watch for that video. That's gonna be a really important one on something that I really think is happening in the market right now. And it's potentially going to set up for some big moves in the first quarter of 2021, 2022, that is. Anyway, so S&P set for biggest 3-day drop since May. In my opinion, this is delicious. First of all, the reason I think this is delicious is because I'll tell you, June, July, August, September, I cannot tell you how many people were leaving, again with the freaking comments, okay? But how many people were leaving comments going, oh my gosh, if only we could go back to May 12th pricing. Everything was about go back to May 12th pricing. May 12th pricing. Look, May was freaking great. Tesla's probably not the best example, but I'm just going to go back to it anyway. Look at somewhere right around here, May 12th, right around here, there, May 12th, 13, this area here, CPI data just came out. I mean, Tesla was at a close of 584. Did go a tiny bit further, about to May 19th, but this period of time, oh my gosh, people wanted to go back to that so hardcore. Look at some of the other prices, okay? And this is really important because Enphase, folks, look at Enphase May 12th, $108. It got so freaking low, that Enphase itself started buying their own shares back like crazy. And it was so beautiful. It was so good. And those are the kinds of things that you want to watch. So one of the things that I'm going to write down right now is you really want to watch for companies buying their own stock or insider transactions during this time. So I'm going to write down insider and buybacks, especially unannounced buybacks. Apple's been buying back their stock a lot, but that's different from unannounced buybacks because the price is low. Apple's just doing that as a way to return capital to shareholders. Buybacks, in my opinion, are actually a much more efficient way of returning capital to shareholders compared to dividends. I think dividends are a curse, even though Apple provides dividends as well. I sided with Steve Jobs on no dividends because I quite frankly, I think dividends are stupid. If you want cash flow, sell your dumb stock, right? And sell it at long-term capital gains rates. If you don't want the cash flow, then don't sell. But with dividends, you kind of get forced the money on you, right? So if you don't want it, I got to take it. And then you pay taxes on it. So anyway, it's just a little bit of a rant there on dividends versus share buybacks. Prefer share buybacks. But again, that May 12th timeframe is such a critical juncture that we hit because there was so much fear at that time, specifically in the larger companies that we had. So, for example, Enphase, I believe Etsy was relatively low. Larger companies are going to be those over $10 billion, right? This you could see these bottoms here. Look at that Enphase bottom over here. And I'm sorry, this is Etsy. And look at how we actually channeled. We hit the bottom. And then we channeled for a bit before we had our breakout. That's pretty critical right here. We want to watch for these sorts of things. And I think this is a very, very similar move that we could see over here. Enphase is not quite, I'm sorry, Etsy, I keep saying Enphase. Etsy is not quite yet ready to break its 200-day moving average, but it's heading there. And that's what we saw in May as well, breaking that 200-day moving average. Those are big moments. So these are, in my opinion, opportunities. I love the fact that Bloomberg is referring this as a painful time, as painful of a time as compared to the beginning of or middle of May. I think that's a really good thing. That's great. Yes, I agree. Olympic Fireball. A lot of insiders are tax loss harvesting. I wouldn't necessarily say insiders, maybe, because insiders oftentimes have options. But I do think that there are a lot of people tax loss harvesting. So while I question the insider part, I do think there are executives like Zuckerberg and Elon who are selling for fears that taxes may be higher in 2022, so they may as well sell now. I agree with that. But yeah, definitely some potential issues there with tax loss harvesting. Absolutely agreed. So let's see here. Quebec closes bars, gyms. I think schools are getting closed in Quebec as well. Solar stocks fall after Biden's plan fizzles. We're pretty familiar with this already. We've got, what else do we have here? Kathy Wood's 40% return prediction draws rebukes. I mean, no surprise. Everybody loves to bag on Kathy. I don't. I really kind of align probably 90% with her thesis, as I broke down in my video this weekend. I guess I would be criticizing myself if I disagreed too much. But I also try to be realistic. But anyway, so yeah, this is quite painful for certain stocks here. Look at this. Solar Edge is another solar inverter company, kind of like Enphase. It just broke its 200-day moving average. It is substantially down from its 50-day moving average. Something to keep an eye on. This is now dropping us 264. You know, we've been at these prices not that long ago, October, July. So it's not like it feels like this substantial deal that we're getting over here. Wow, I have to say I am surprised to see Peloton potentially. It's not hitting a new floor. We have this floor around the 36.42 over here, but I'm surprised to see Peloton down 9.29% right now. That does beg the question as to maybe is there some additional news on Peloton? And so we're going to find that out in just a second. At the same time, I think we've also, we've got oil selling off as well. I generally don't get into the commodities. I don't think there's a competitive advantage. So I think commodities can be fun to trade, but I know oil's going down, which is honestly no surprise. I mean, when you think the global economy is expected to grow at a substantially slower pace because of Omicron. And I think part of the market too is freaking out because you have this potential overreaction of governments. Like when you hear that Quebec is shutting down schools and all this stuff, it's like, whoa, that's a lot of potential government overreaction, right? So that's a risk. So, okay, let's see here. Yeah, if you just read the title, go watch the first like 2-3 minutes or whatever. Okay, let's go ahead and find out what we got going on with Peloton here. So, Peloton. Okay, so, and I think no. Okay, never mind. I was going to look up the short interest on Peloton, but I don't think that's so terribly important right now because I think it's actually relatively low. Looks like we have a Peloton shareholder alert by former Louisiana Attorney General. Okay, class action lawsuit. Oh, this is just a reiteration of class action lawsuit. Actually, no, notifies investors that a class action lawsuit has been filed. Okay, so it's a new lawsuit. Yeah. Okay, well, that happens. The stocks go down and then they get beat to the ground by the short sellers, by the short selling attorneys. That unfortunately happens frequently. Okay, let's see here. So Peloton, Solars, Rivian down at $89. Woo! I mean, this is one of those that does have some good risk in it, but I do think there is going to become a cheap point where it makes sense to buy this one. If you have not yet watched my video on Rivian, I highly encourage you watch the Rivian video. Do read the pinned comment though, because there's this minor revision. Doesn't make a big difference to the broader valuation or evaluation of the company. So watch my Rivian video. Just type into YouTube, meet Kevin Rivian. Okay, Carvana, 7.86%. You know, Carvana, this used to be a lot higher. Now, I haven't been paying attention to Carvana. Yeah, look at that. It was almost $400, folks. Look at that absolute destruction in the valuation of Carvana. Just ridiculous. I mean, ludicrous destruction there. Carvana's valuation was actually one of the reasons I originally invested in Shift Technologies. I did close my position in Shift Technologies mostly because we're having this dramatic downturn in the small caps, which I think will set up for a 2022 reversal. But exactly when that reversal is going to set up for the smaller caps, that's TBD, unfortunately. So then we've got, oh my gosh, API. Oh, wow. They're at $16. Holy moly. Okay, so this peak right here happened when Elon Musk went on to talk to Vlad on Clubhouse right after the GameStop crisis. So Clubhouse was really getting a lot of attraction during this and attention during the GameStop crisis. But then when Elon Musk went to go talk to Vlad, this thing freaking exploded because it's like the backbone of Clubhouse. Holy moly, that momentum has absolutely gotten destroyed. Wow, I have not paid attention to that one in a while. I'm not in it, but wow. Oh my gosh, Moderna actually turned red. Now, one of the reasons, and I speculated about this earlier, I was not very happy about the Moderna results because the Moderna results with the antibody increase on their booster shot were really only results after 29 days, which I understand. Okay, 29 days, like, come on, we got to give them some time to do their studies and stuff. But you can find people who are like 60 and 90 days past and I imagine conduct some form of a study for Omicron exposure and antibody reactions once you're a longer term past. I don't know, so maybe I'm wrong about that. But when I see like the newspapers and the mainstream media, they're like, oh, Moderna, yay, 80-fold increase with the full booster shot or whatever, if you get the full dose of the booster. And I'm like, wait a minute. The press release on Moderna says that's only 29 days after getting the booster. Of course, your antibodies are going to be higher 29 days after. But I want to know 3 months after, 4 months after, like, does this go back down the toilet, right? The antibodies are the most fleeting thing with these vaccines, but also antibodies are relatively fleeting with prior illness. What tends to last is that T cell response. And that's actually really critical for preventing that severe disease. So especially with Omicron. Okay, so Neo down to 28, 25. I feel bad for Neo. I love Neo. I really do. I want to visit them in Norway. But let me put it this way. I'm very glad they're expanding outside of the Chinese market. They need to get away from the Chinese consumer. And they're a Chinese company, which I know is kind of crazy to say. But they have more info. Where's that, Hawkman? If you have that data, is that in the press release? Because I was reading in the press release and I didn't see that. Are you saying they will have more, or they already do? Maybe give me a clarification on that. But anyway, Neo, it's good that they're trying to expand to Europe because they really need to. I did see the ET5 release. I think it's awesome, especially that battery pack. I actually think it's unbelievable. Like TBD, I'll probably make a video on it. But I mean, that range that they're talking about, I think is insane. If they can pull that off, that is actually huge. So Matterport, Palantir, look at that. Palantir back under 18. I think we're seeing relatively similar floors here, sitting at 18 again on Robinhood. But these are such similar numbers that we keep seeing over and over again. Enphase right around 180, sitting at 178. Hey, it's a $2 discount to that 180 level, fine. Lucid also kind of hitting a floor around that 36 to 38 level. Those are the kind of floors that you want to be looking for. Like, okay, maybe we buy the dip, right? Those are the things that I'm looking for. So DocuSign still above its floor level as well, sitting at 148. EXPI stuck at 33. We keep seeing all this red, but it comes after these little brief moments of green. I think Tesla's probably the largest one getting hit here at sitting at about 900. And going into Elon potentially, well, not having fully finished selling, but potentially being done for 2021. Are we already at the bell? Oh my gosh. Dang it. Hold on.
New lows. So you see that now around 23. So a net positive tone in the last few hours of trading right here as the S&P finishes down just over 1%. The Dow down 437, was down almost 700 at the peak. The NASDAQ is also lower on the day, but also not really underperforming as we hit the close. S&P 45.68.
Okay. We have Micron Technology reporting today. We have Nike reporting today, 15 minutes after the bell. So we're waiting for Micron actually potentially right away. We do have the Dow down 1.23%, S&P down 1.14%, NASDAQ down 1.24%, Russell down 1.57%. That move on Micron should already be out. Let's see if I can find it here. MU is the ticker symbol. And not out yet. So we are awaiting Micron and we are awaiting Nike. I'm going to have both of those pulled up so we can find out what those earnings are as soon as they come through the tape. Nike is expecting a 6.8% move in after hours, and Micron is expecting a 7.5% move in the after hours. Okay, so let's see what we got here. We have... Let's go back here. There we go. Okay, so lots of red, obviously. Has DraftKings hit a floor yet? That would be interesting. Somebody else says MU's at 405. Okay, so you have a different resource than I do, but that apparently you appear to be right since we're a little bit behind. Oh, there it is. It just came in. Okay, Micron comes in with... That's a miss on cash flow. Adjusted EPS comes in with a beat, though. That's a beat. 216 adjusted EPS versus 212. Tiny beat there. Cash flow from operations came in at 294 versus 4.07 bill. And net came in at 231, 2.31 billion. Total revenue came in at 7.69 billion. and unadjusted EPS coming in at 2.04. It is a beat on adjusted EPS, but a miss there on cash flow, which I wonder why they're just particularly reporting that metric here. Looking at MU, it actually appears to be peaking in the after hours on that little beat there. About 4 to 5% up right now, though it's fluctuating. Okay, here we go. Revenue. Oh, good. We have a forecast that's beating. Forecast was 7.32. Midpoint on the forecast is actually at 7.45 billion for Q2 revenue. That's a beat for forecast revenue. That's good. Or forecast revenue or forecasted revenue. Who cares? 4 to 5%. That's exciting. So good job, Micron there. Now up about 5% in the after hours. We are waiting for Nike to come through. Nike is historically a big indicator for consumers. I think that this Nike earnings report is going to be very critical for outlook-wise. We want to know what the outlook is for the preview here in the next quarter. If we end up getting a bad guide for the first quarter of next year, or even this last quarter, this quarter that we're in here, because right now they're going to report to the September 30th. We want to know, hey, wait a minute, or September 30th. We want to know, hey, how was the last quarter of 2021? But also, what's your outlook for the beginning of next year? That could be pretty big. So we'll see what happens here with Nike. But otherwise, we've got Micron doing very well. Nike coming out soon. So here's DraftKings, unfortunately. DraftKings still struggling to find a bottom here on DraftKings. You've got, somebody says, look at crypto. Okay, I will then. I will do as you say. Oh, dude, thanks for the $5, Marcus. Appreciate it. What is this? Oh, look at that. It's literally playing our lines again on the 1 minute. You can't make this stuff up. We draw these lines every single, well, actually, we look at the lines every single day. The lines have been here for months. We've not moved this channel over here in a very, very long time. Actually, I don't think we've ever moved our channel. We just had it here. And we keep hitting this floor over here, which is very interesting how we bounced off of this today. So I'm a little skeptical to draw a line yet here, but I'm watching this. So we've had quite a few oversells here. So there's something going on around that mid 45.5 level, but it's good to see crypto going right back into its channel where it belongs. Look at this perfect freaking bounce on Ethereum. You cannot make this up. Jeez, look at that. From this morning, perfect freaking bounce off. Gee, I wonder if it's going to bounce off the top again. It's just over and over again. But anyway, good. What? How to firm finish up the day? Let's take a look here. So Affirm ends up at 96.27, pretty close to our support over here. We have, let's see, what did well today? Big Digital actually went up today, probably as crypto started recovering. We started seeing a little bit of recovery here, and I think they almost kind of get forgotten sometimes. Is CNBC really just now reporting Micron? Hold on, who are they reporting?
Line $2.16. That is ahead of Wall Street expectations of $2.
We reported Micron like 4 minutes ago. How does it? All right, we beat that one a while ago. The year is 2045. Kevin still can't believe every time his TA works. That's funny. I know. All right, so Carnival, look at that. Almost back to 19 this morning. We actually opened pretty low this morning. What was the low this morning? I'm pretty sure our low was in like the 17s this morning or something relatively low. That was, oh yeah. Look at that open this morning, folks. Oh, yeah, we opened around the 1760s on Carnival this morning. So nice recovery on Carnival, which is somewhat surprising. Is NVIDIA moving with Micron? That's great. NVIDIA's had a little bit of a deal spawn as well. Let's take a look here at NVIDIA. NVIDIA, a little bit of sympathy there, 0.8%. I'll agree with that. Still 277 for a company like NVIDIA. Juicy. I like it.
I've liked NVIDIA for a long time. We're finally getting some softness. And we really seem to be hitting a potential soft floor in these 270 to 280 range, somewhere around here. We'll see. I really hope at some point as well we hit a floor for Neo, but I'm just not seeing it yet. We just continue to trend down. Palantir, it's been bobbing around that 18 level. It's really trying to go lower, but fortunately it hasn't been. So we'll watch this. Okay, so let's see here. To the basement we go. Oh no. Any reason you prefer Carnival Cruise Lines over Norwegian Cruise Lines? Not really. I think it's just for whatever reason at the beginning of the pandemic, I made my bets on Carnival instead of the other ones. And I had my reasons then. And I think I've kind of just become more attached and familiar with Carnival. I don't have anything bad to say about Norwegian. If you are going to invest in the recoveries, I would wait for that peak inflection, which I think, not financial advice, might end up coming in January. It could come sooner though. So you really want to pay attention to those Omicron updates, whether it's from me or other people. But Omicron is going to be a big one. So we're awaiting Nike earnings here, and the Nike earnings I think are going to be critical to regarding forecasting our economy and what we could expect for consumer stocks going forward. Big potential risks. So we'll see. Any other reason I can find out why Moderna went down as much as it did today? Well, let's take a look here. I'll take a quick peek. mRNA. Let's see what's going on. Welcome, Tanner. Okay, so Carnival. That's a comment on the experience. Something. The experience. Me or Are you asking me about the experience? I don't know. I don't even know if I've been on Norwegian. I think I've been on Norwegian once in Carnival like 2 or 3 times. Disney was awesome, but Disney's just too expensive, their cruises. Anyway, I don't see a particular other reason why Moderna would be selling off. I think if anything, falls despite booster shot, blah, 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 blah. New Zealand says a man's death may be linked to Pfizer. That could have helped push a U-turn. Anytime you link a death to a vaccine, you have potential issues, right? That's no bueno. So health officials in New Zealand believe a 26-year-old man's death may be linked to the Pfizer vaccine. The man died within 2 weeks after his first vaccine dose, according to Bloomberg News. An earlier review showed that the probable cause was myocarditis. That is a known side effect. Most of that inflammation of the heart muscle passes, and most people recover within 3 months. Sometimes they have lingering symptoms, but that's not good. With the current available information, the board has considered that myocarditis was probably due to the vaccination in the individual. The board said the COVID infection can itself be the cause of myocarditis as well as other severe illness, and it remains safer to be vaccinated than to be infected with the virus. The man's death marks the second in New Zealand that may be linked to COVID vaccines. Late August, a woman died from myocarditis, which the board said was likely due to vaccination. 2 other people, a 13-year-old man and a man in his 60s, have also died with potential myocarditis, though they may not have been related to vaccination. And then, of course, they get into benefits outweigh the risks and so on and so on. That could be another potential reason you saw Moderna fall today. This is a WebMD piece, and this was published today. New Zealand says man's death may be linked to Pfizer vaccine. Yeah, that could lead to some pain for the vax stocks for sure. Okay. Yeah, that is true. No vaccine is perfect. One of the things they say that actually can potentially lead to that myocarditis is the way it's potentially administered. If it's administered in such a way that it hits potentially a vein, which is weird given the injection site usually. But if it does, then it could potentially deliver the mRNA vaccine essentially directly to your heart and lead to an increased chance of this myocarditis inflammatory reaction. Whew, sad. But anyway, okay, so we are waiting for Nike. Nike earnings. These are going to be critical for the market, I believe. And they should come out within the next 3 minutes. Muscles are highly vascular, so it's not weird. Well, all right. They're supposed to aspirate before injecting. Yeah. Hold on a sec. One sec. Okay, sorry. Oh, no. My wife just got out of the hospital after having a baby and got tested. Now they say she has the virus. I'm terribly sorry. Like, that is probably like the worst time to honestly get COVID, is like right after you just delivered, like you're dead. Like, you feel dead and over. Not that I've ever delivered, baby, but just remembering, Lord, that sucks. I'm sorry for y'all. That's well, hopefully it's mild and y'all get through it. But ugh. Okay, so next, Nike earnings. 2 minutes. 2 minutes, Nike. She has no symptoms. I think that's what you mean. No symptoms at day 6. We're both not vaccinated. We both don't have symptoms. That's good. Remember, one of the ways, in my opinion, the most ideal way, not that anybody wants to catch COVID, but in my opinion, the most ideal way to get COVID is to get exposed with a very low dose of COVID, because the lower exposure you have to COVID, the less your body needs to fight COVID, because you have a smaller initial attack. And so it allows your body to mount an appropriate defense without overreacting. And so that's why a lot of us can be asymptomatic when we get exposed to COVID. So for example, if somebody with COVID, like, looked at your face and just like sneezed to your face and breathed on you for minutes, let's just say, like, highly infectious person talking to you face to face, or like yelling or shouting at you, you'd probably get a terribly high dose of COVID. And you probably have a horrible illness if you weren't, either vaccinated or had prior illness. Whereas, like, let's say you walked past someone on the subway and you walked through their COVID cloud or whatever briefly, and you got this minor exposure, you could be asymptomatic. So I think it's really neat how the level of your exposure can also determine how sick you get with COVID. I think this is where you get these anecdotal stories about people that'll say like, oh, well, I took vitamin C, or I took vitamin D, or I took this, that, or whatever, when really it's quite hard to isolate why you were asymptomatic. And some people are like, oh, well, my immune system's just good. Not necessarily. You could have been exposed to a low dose. Anyway, but no. Look, when I hear people are asymptomatic, honestly, I think that's the best way to go. It's like, oh wow, really? I got COVID? Like, I don't feel anything. That is, Nike's out. Hold on. That is the best. Okay, so Nike comes in. Oh, that's a beat. 83 cents versus 78 cents a year over year. Wait, hold on. That's year over year. Hold on a second. That's the year over year estimate. Wait a minute. Greater China revenue came in lower. Gross margin beat. No, it's a meat estimate. Okay. Gross margin hits 45.9%. The estimate was 44.2. That's a beat. That's great. Greater China revenue came in with a miss, 1.84. The estimate was 2.14. So China's slowing down. There's your NEO. Those Chinese consumers are getting hurt. But NEO's total revenues beat, 11.36 billion versus 11.26. That is excellent. Inventory came in slightly lower than expected, which honestly is probably not a terrible thing. We want inventory off the shelf. We want inventory in the customer's hands. You've got apparel revenue coming in 3.65. North American revenue, 4.48. So if you want exposure to an international market, you're only getting about 33% of your revenue at Nike from North America. The rest is coming from around the world. That's actually really good. Greater China revenue down 20%, folks. That is bad. So that is a big Chinese consumer whack. And Nike is evidencing this. I bet you that that earnings call at Nike's not going to be happy about China. This could be interesting. This could be possible. This is true. Chinese customers are pivoting to other brands. Don't slander the country. Not trying to slander the country, but that's an anecdote. We'll see. We'll see about that. We'll see what the earnings calls show, and if that ends up being true at other consumer brands in China. Nike right now only up 1.1%. It's up only about a 1% in the after hours right now, despite beating EPS. EPS coming in at 83 versus 63 cents. So that is very, very interesting. Uh, Nike report. Okay. Yeah, I'm trying to see what the forecast is going to be. Nike up maybe about 2% on beating. I'm really looking for forecast. Asia, Pacific, and Latin also down about 8%. I really think America is going to be the killer in 2022. Like America is going to run and the rest of the world's going to suffer. And that's not to try to be like home bias or like elitist or something like that. It's just, I think America has the strongest econ to get through this. But that's interesting. Negative 20% in China, negative 8% in Latin. That's quite interesting. Yeah, we'll have to watch that earnings call to see what for more details there. Let's see. Somebody says Webster changed the definition. If you're anti-mandates, you're now anti-vax. I think that's probably a joke. But yeah, I saw that a lot during the election cycle here in California as well. Like I was for people having choice, and I wasn't for all these like insane mandates. I think people should get vaccinated, but that's just my opinion. I don't want to like hold somebody down and force them to take a vaccine. Yeah, like I would say that during the campaign, and people are like, "What, are you anti-vax?" I'm like, "No, like literally just said I think you should get it." But it's just like politics sucks. Anyway, Nike's actually running now. Now it's up about 4% on this beat. So CNBC is covering it. So it seems like once CNBC covers it, it starts moving. It was only up about 1% once we covered the earnings. But yeah, really, it seems like it was a beat in North America. And I'm trying to see what the expectation was for North America. Oh, North American revenue was up 12%. That's great. Now, the question is, what's the forecast? Is that going to continue? And that's going to be your consumer guide. I still don't have a forecast here. Let me see if I can get it from their 8K. Let's do it together here. Okay. Politics a waste of time? Yeah. Tell me about it. I just feel bad. It's just the politicians we have broadly suck. All right. Let me see if I can get the last report here. Yeah, here we go. All right, let's see if I'm looking for a forecast here. Give me a forecast, would you? So we already went through the earnings. We just want a forecast. Despite continued inventory constraints led by North America's 30% growth in North America, record Black Friday week results. Oh, that's an interesting phraseology here. Black Friday wasn't great. It was Black Friday week. Nike brand digital delivered strong revenue growth, led by double-digit growth in North America, offset by a decline in China. This is going to be a very interesting earnings call. Where's the forecast? Come on, y'all. 15 bill in cash. My goodness. Conference call. Really? Really? No forecast? Jerks. Largely due second quarter revenues flat on a currency neutral basis, largely due to lower available inventory. Blah, 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 blah. No forecast. That's bizarre, but okay. Wow. Geez. ER registered nurse got COVID. July 20th, been on a heart failure medication since March. Yikes. Everyone has risk factors. That's a good way to put it. Everyone's got risk factors. Okay. Yeah. The no forecast bothers me a little bit. I want to see if their advertising's going up, though. That's going to be a big one as well. So revs up selling. Not really. What is that? 18, 15% or something like that. I mean, yeah, it's gone up. It's gone up. What am I saying? Let's see here. Actually, relative to those revenues, wait a second here. Folks, look at this. Year over year, their advertising and administration has gone up 15%, but their revenue only went up 1%. Now, their profit margin has gone up, so they've probably raised prices, meaning they're making more on what they're selling, but they're not actually bringing in that much more top-line rev. And they're having to advertise more to get it. That's what I'm talking about. It's, in my opinion, I got to read more about this, but advertising 2022, count me in. Where do I sign up? Please. Where does Nike advertise? And that's where I want to be. In fact, let me see if I can find that really quickly, because for giggles, I'm here, and we don't have I doubt they're going to talk about it. If I were an analyst, I would ask in the earnings call, but I'm not. So, advert. Do we have the word advert in here? See, sometimes they'll mention like their partners and stuff, like where they're advertising. Increased reliance. Oh, see, look at this. Look at this. In addition, our success in maintaining, extending, and expanding our brand image depends on our ability to adapt and rapidly changing media environments, including our increasing reliance on social media and digital dissemination of advertising campaigns through our digital experiences. That's money right there. Right there. This is telling you Facebook, Snapchat, Twitter, YouTube, which is Google, right? That's increasing reliance. That's big. This is from their annual report, which their annual report was actually done. Annual reports usually we're going to get this kind of stuff. This was, I think, earlier this year, like March or something like that. Or was it, wait, or was it more recently? Hold on. Annual 10K, 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 10K. See, I think they have a weird year end. I don't really know what it was. Whatever. It doesn't matter. I want to read more about the advertising. There should be a date up here. Why is there no date? As of July. Oh, there we go. October 6th. Oh, okay. That's recent. That's good. That was their last report, was their annual. Ooh. In addition, we market products globally through a diverse spectrum of advertising and promotional campaigns, including social media, mobile applications. There you go. Online advertising. Yes. Mobile, right? Big, important. Look, they're spending 15% more on advertising to get 1% more revenue. I mean, I can't beat this horse enough. It's advertising is going to be the year of 2022. You're going to see more and more of this crap. Okay, misuse of brand. Demand creation expense decreased primarily due to lower marketing and advertising expenses for our brand events and retail operations, as well as lower sports marketing expenses as sports events were postponed due to COVID. Okay. This was in the last one, but they've gone up since then. Demand creation expense, advertising expense decreased primarily due to brand events. Okay, so less events because of COVID. Delta. This would have been because of Delta. Okay, we understand. So they had a decrease then. They ramped it up. I want to see more about where they're advertising. Advertising. TV, digital, print advertising, media costs, brand events, advertising, media costs. I wish they would tell us like their partners. Oh, that'd be so money. Like we advertise on YouTube, right? That'd just be too good to be true. I mean, we can guess where they advertise. Like honestly, you should pay more attention to the ads as an investor. Really good idea. That's the downside of having YouTube Premium. I don't see any of the ads. I should probably start paying attention to them. Like turn YouTube Premium or just log out. First time advertising media. Okay, this is just accounting purposes. Cooperative programs, blah, blah, blah. Okay. All right. But it's good to note that they're going increasingly digital. That's really the takeaway of this annual. Let's see what happens with consumer demand going into that earnings call. That I think is going to be very interesting. Yes, Snapchat, absolutely. What's up, B? Looking over here. I see Facebook ads about Nike all the time. Awesome. Good to know. Nike, we advertise on weekends. Yeah, right. Wyden plus Kennedy is who Who advertising for? Oh, Wyden plus Kennedy. Who that? An independent creative network. I wonder who they use. Savor everyone. Oh, so they might do like the actual brand dev, or like what the ad is going to be. But then the question is, where do they distribute to? That's always the tricky thing, is trying to figure out what I care about is the distribution, because I can't necessarily invest in private companies like the content creators like Wyden or whatever. It's a good reference though. It'd be worth looking to see where they advertise. Okay, let's see here. I work in advertising. I should ask for more money this year. In this case, yeah, pretty much. Thank you. Let's see here. Companies will have to spend more advertising to achieve growth forecast. Completely agree with you. We need more memes, pretty much. Use a doctor. Oh, that's from earlier. Thank you for that. Let's see here. When can you buy the dip on the courses? Anytime before the price goes up. I appreciate you saying that. But it doesn't go lower. It goes up over time. Okay, cool. It's the advertising agency. Okay, I want to look at that. Thank you for that. Okay, folks. Oh, it's on Wikipedia. Thank you for that. All right. Thank you so much. I appreciate y'all being here. Very interesting live stream here. We'll